All right, so switching on to the next segment, we're going to cover an investment related topic today. And this is an investment that this is just for informational purposes only because it's not something Gerry's a big fan of. But it's still important to know what it is because it does have some impact on the market. Gerry, what is short selling?
So short selling is where a investor, or I would more loosely say speculator, even gambler,
Evil person,
evil person,
freedom hater,
borrows somebody's stock. So somebody owns shares in XYZ company. They go to that person and they go to the broker that person has their shares held at and asks to borrow those shares. And without getting into the gory details of that, they do borrow the shares, which means there's a carrying cost for that. It's like borrowing money, but they're borrowing shares. And they sell those shares. So they don't own them, but they sell them. And the idea is that if the stock goes down, then they can buy it back at a lower price. So it's the revert. It's buy low, sell high, but you sell first and then buy and then buy it back later. Hopefully, in their case, they're buying it at a lower price. So they're
sell high, buy low.
They're rooting sell high, buy low. They're rooting for the stock to go down, and it has to be done in a brokerage arrangement. It's not something that you can do outside of that. I mean, maybe you could. I haven't seen it. I'm sure there's a way to do it in some like a private format, but generally it's done, using a broker custodian who also makes money on that because they'll get the interest costs for that, and of course the trading costs of whatever trading costs there are for making the transactions. And so, yeah, I mean, it's simple from that standpoint. It's complicated from the standpoint of what it means for the market and what it means for shares of companies that do that. And in its simplest form, it's just simply borrowing someone else's stock and then selling it. It's a trading strategy. It's not something, because of the carrying costs, it's not something that you're going to do permanently.
Well, so on an individual basis, the reason that this oftentimes isn't ideal is because of the risk. Things can go down a lot faster than they can go up, even though the stock market does generally have an upward bias. So there's that element of risk that is really unappetizing for most people from an individual investor standpoint. But beyond that, why don't you like short selling?
Well, I don't find any economic interest in it. For my entire career, I bought into the idea that I've been told from everybody under the sun in the brokerage world that said, oh, it provides liquidity. Oh, it's disciplining management. And in other words, management is awry. It's the short sellers that go out and find out that's happening. And, they then short the stock and that keeps management honest because they have to worry about what the ramifications of that are. I find that disingenuous. I find it, and especially because nowadays, and I don't want to get too much into the weeds, but it's much easier for shorters to short than it used to be. And I won't get into the technical reasons for why that is, but there are rules that were in place that kind of kept shorting from being able to be to run amok, if you will. I still think it was problematic, but it wasn't as problematic as I think it is today. And in a less liquid market, it doesn't take much for it. And what we see all the time are these short sellers that are out there floating stories about companies that end up not being true. In some cases, I would argue they're fraudulent, but nobody can ever prove that because they're always able to fall back on, oh, well, it was our opinion. I mean, I can go out there and yell, fire in a crowded theater and say, oh, well, I thought I smelled smoke. It's kind of like that. And that's essentially what these folks do. And, they're often attacking the small companies that can ill afford to have their stock prices being hammered, because that affects their ability to raise money in the capital markets. I think it's become more and more pervasive, and so more and more I've kind of evolved into saying I truly think short selling should be illegal, shouldn't be part of the market. I don't need a short seller to discipline my management. I'll do that myself, thank you, as a shareholder. Shareholders don't like what the management is doing. They sell the stock. But that's short selling. And that's a very short version of why I don't like short selling. I don't like it. And of course, I'd be accused of being biased because as in this podcast is called the Long Only Podcast. We are a long only shop. But we're doing it because we want to invest in businesses, whether they're public or private or whatever. And we're not interested in this trading mentality. And short selling is the epitome of a trading mentality. And I just haven't seen in my coming up on 4 decades in this business, I have not seen the economic benefit other than to those people who are doing it. And I often wonder if even they benefit that in the long run from this, because I'm sure they do. Otherwise they wouldn't be out there.
So these tales of talking about the economic benefit, it sounds like justification. This is a practice in search of an explanation for the practice when they're giving out their economic benefit.
Well, and the explanations of disciplining management and liquidity are the things I always hear. That's what I always hear.
That's how everything is justified, though, it seems like these days.
Oftentimes.
So, liquidity, I should say, in particular.
Liquidity, price liquidity, the market provides liquidity. Anybody who sees the volatility that's going on, especially in smaller companies today, and suggests that there's perfectly reasonable liquidity is not paying attention.
I think this much is not very controversial. You can have a long, happy life as an investor and never engage in short selling. I think many
most
people
definitely
agree with that. So,
and I will emphasize too, as truly long-term investors, at the end of the day, it shouldn't matter that much. But there are real cases of companies that have been taken out, and we're not we don't tend to be and have never been big biotechnology company investors, if at all, really very almost none. But that is an industry they pick on, and they've taken some companies out, and it's not to say that every company out there is lily white and crystal clear, perfect. But I think there's a lot more nefarious activity going on the short selling side of things. I'm sorry, and we've witnessed it for so many years and watched how it plays out. And you can write the script every time it happens. That float the story and all these terrible things about what this company, and they're often done with very, very well-written research reports that look like they're super serious, hashing out things that ultimately end up being proven in not every case. I'm not saying every case, but the majority of them that I've seen and end up being, nefarious or bogus, or if not outright fraudulent in what they're saying, or libelous or whatever. And yet there's really no there's no prosecution that can be won, I don't think, because again, it comes down to falling back on, well, it's my opinion. It's like a freedom of speech thing. Well, I'm more than happy to have you can say what you want, and I can disprove it or I can disagree with it. But when you're saying whatever you want in a way, especially with social media nowadays, and with the way people shoot first and ask questions later, a lot of damage can be done to these small and mid-sized companies because of this.